Hi everyone, so Gaz from Full Picture Business and Property Secrets, and today we've got a big one for you. Today's about crypto, but it's about debunking the myths. It's about understanding crypto. So when you get these cold callers coming in, when you get somebody that's bugging you saying hi on social media and then saying, oh, jump into my crypto, but you don't know what you don't know, but you're really intrigued about getting into crypto. Well, what I've done is I've brought my friend Alex, who's into crypto. He's got a course, he's out there, and he's very kindly come along to let you know some things that you need to know before you start looking into crypto professionally. So if you've got the urge to get into it, it's the next revolution, then Alex is going to give you some top tips, top hints, how he got into it, how to structure things, the lingo, so you'll understand it. Thanks, Alex, for coming along.
Hi, Gaz, you're welcome. Thanks very much for inviting me on. Been looking forward to this. And yeah, just really looking forward to helping some of your listeners find out the answer to their questions, maybe some of the things that that they've got in their mind, some of their concerns, because I travel a lot and I tend to hear the same questions over and over now. You'll get a split in the world or the community. You've got those that have invested and they either lost money or made money. And then you've got those that have been thinking about it, but they're on the sidelines and they tend to have the same concerns, really.
Yeah, and there's a lot out there that I feel, there's a lot out there that people are told one thing and it's not actually true. So that's why I brought you on, because the stuff that I've learned from you has been phenomenal. And I wish I'd had it a long time ago, just purely because this is the next revolution. This is going to be a big thing. There's a lot of money to be made and there's a lot of people making millions and if not billions at the top end.
Yeah, for sure. And obviously, as we both met through the property world, it's nice to see that we've got the same opinion, because out there, most people seem to think that you need to be fully in love with one thing or the other. And as someone that started out as a Robert Kiyosaki Rich Dad coaching student, he's someone that also is behind crypto. So success leaves clues. And for me, I never fall in love with an asset class. It's just a vehicle to move your money from A to B. But you're right, there basically is a whole world of opportunity in crypto still. There isn't anything that compares, in my opinion, to the kind of gains you can experience. And if that wasn't the case, I genuinely wouldn't be interested. I'd be looking at something else.
Yeah, for sure. There's definitely lots of opportunities. And again, that's why I've asked you to come on, because some people don't know what they don't know. And I say that a lot because there's a lot that people don't know. And like I said, misconceptions. I want to get rid of those misconceptions. So there's a lot of people out there that recognize that crypto, it could be the next big thing for them. But they're not doing it because there's so many different people setting a narrative. So you've got the media setting one. I know we're going to chat about this later. We've got just people that within different industries that are skeptical. And I want them to go from saying one day I'm going to get into it to saying this is day one. So shall we jump in and shall we start talking about how you got into crypto or your what we're going to do, ladies and gents, is we're going to do a bit of a mini series. So we're going to keep it short, sharp and sweet per module. But the module isn't a course. It's just going to talk you through, give you the lingo of how to sort of look and get into crypto if you're interested.
Yeah, okay, great. So basically the most important thing to do is to get educated and learn. Now, there's loads of free information on YouTube. I've been in crypto now since 2016 actually, and normally when I tell people this, they just think, oh my gosh, you must be a billionaire, you must have got Bitcoin at $200. And I'll tell you now, I've got no ego, and I quite freely admit my mistakes, because number one, I want to learn and I'm on a continual journey myself. But when I first got into crypto was basically roughly around the beginning of 2016. There was some of you may or may not have heard, there's a YouTuber out there called Jeff Berwick, and he's got a channel called The Dollar Vigilante. So he was actually the first person that got me, I would say, back onto crypto, because I did hear about Bitcoin in 2012 through a business associate of mine who's Belgian, and it just wasn't on my radar, went over my head. 2016, I started watching the Dollar Vigilante channel, and I remember the first ever crypto I bought was one called Steam. That was like an early crypto social media platform. I made really good money on that then, probably something along the lines of 200-300%, but I didn't put a lot of money in. But this was where I realized, like, wow, here's this asset class or this thing that you can buy You control it, you own it. There's no intermediary, no middleman, no trusted intermediary. And all of a sudden, like I guess my third eye woke up, and this was what kind of really put me onto it. Obviously, I started to study it really hard then and try and learn everything I could. Back then, there wasn't really mentors as such, and you would just be looking for information online. Because I was following the Dollar Vigilante channel, they actually had a program or like a membership, like a premium members area. So I signed up to that, and that was what basically put me on the journey that I'm on now. 2017 came, and we had the ICO craze of 2017, and it was basically all through that year that I made a lot of money, but made so many mistakes. And yeah, I basically kind of self-taught myself. And one of the reasons why, so in my program, the first thing that we cover is protection, protection, protection. We basically talk about why it's so important that you set your computer up, your emails and everything from the outset for security, because there are a lot of scammers out there. In fact, to be honest with you, the main problem you'll have is just don't click on any links from anyone unless you know them, because that's the major way that any scammer, or they're called phishing, like PHISH, any phishing people can get into your computer. So if you don't click on a link in Telegram or on YouTube, that's the main thing. But this is why in my course, the first thing we start about is the protection side of things.
Yeah, which is true. You've got, if you've set up the foundations, you're going to be safe, aren't you? You're not going to let people come in there and take over your computer, take over your assets if you've got them, and change passwords, and then you're screwed, especially with crypto.
Yeah. And so, as I said, like 2017 was crazy. Like I did buy Ethereum at 33 pounds, I believe, at the time. And because, again, you don't know what you don't know, it's only with the gift of hindsight that you realize that if I'd have just stuck to one thing, maybe, for example, just storing and accumulating Ethereum, without a shadow of a doubt, I would be well on my way to being a deca millionaire now, because there was projects I invested in with like 1 ETH, and then they were like what was known as an ICO, an initial coin offering in 2017. It was crazy. And actually the reason why Ethereum blew up in value, this is actually something we're going to talk about later on in the series, but we'll just touch on it now. Ethereum is for people that don't know, it's the number 2 cryptocurrency behind Bitcoin in market cap. So number 2 in market cap, in the value, the amount of US dollars held in it. And it's a smart contract platform. So what that means is, simply put, it was the first platform for all of these other altcoins, so alternative coins to Bitcoin, to launch their product. So every single other coin that came after Ethereum pretty much was launched on the Ethereum blockchain. And that is what drove the value of Ethereum to where it currently sits, around $1,800. But my point is there was coins that I put like 1 ETH into, which obviously at the time was 33 pounds, so let's say $50, went and 100x, and I had like 50 to 100 ETH. And then it was just crazy. I was reinvesting that into this project, that project, thinking they would all do the same. And many of these were just what we call rug pulls. The people launched the project purely with the plan to take your money. They never had an intention to deliver. So this is why a lot of the knowledge I've got now from the past 7 years is from all of my mistakes. So coming back to the course, we cover the basics of trading psychology. We ascertain your risk tolerance levels. And I put that into 3 broad categories, because for me, I now know from my mistakes that I'm like Donald Trump. I'm aggressive. I'm like what you call Risky Roger. I'm extremely aggressive, and I'm comfortable with risk.
Yeah. Risky Roger, I like that. Yeah, I really like that. No, that's good. What we're doing is we're building up the bank of knowledge now. And I think it's good that you say that you've made those mistakes, because mistakes, you do learn from mistakes, and it then adapts the way that you go in the future, and it makes you understand things a little bit more clearly. So I do like that. I mean, fail, what is it? First attempt at learning. So even though I won't class a mistake as failing, it's just highlighting some areas that you can change, adapt, and move forward, because change is inevitable.
Yeah, and as we both know, we've always heard the phrase bandied around, like, like a winner learns from his mistakes, but a genius learns from the mistakes of others. So if one thing I'd say is that whilst I have worked with mentors in the world of Forex and one or two in crypto now, there wasn't really many around then. But really, if you can learn, like I basically, what I'm trying to do is create a program, well, I've created it, I should say, to help people avoid all of the mistakes I've made, to just fast track their process. So obviously you and I met on a property program. So, you know, we paid to get educated so that we could fast track our success. And now obviously I know you're doing very well, and I'm also doing very well in my property journey. So really, this is the same thing for people that if they believe I know my stuff, I'm trying to offer a fast track system where you can basically navigate the minefield that crypto is. And even you can't. So we're coming back to the opportunity with crypto. So right now, even now, most people struggle to believe that in 2023, 10 years after, let's say 11 years after Bitcoin's inception, you're still early. We're still early adopters. And the reason being is some of the cryptos on my watch list are like 99% down from their all-time high. So if they return to that, this is why the upside is huge. So the biggest challenge I have now is getting people to understand that, look, if you come on board now, your downside risk is so minimal compared to the upside rewards, but you have to accept you can't have one without the other. It is volatile, but when you understand how to manage that, the volatility is your opportunity.
Yeah, and I was reading something the other day that really hit home. It's don't quit when something starts failing. Stick with it and make it better. Because when you're looking at stocks, trades, crypto, property, they always go up. When you look at what's happened around the world, yes, I know there's crashes that have happened, but if you stick with them a few more years, it's going to go back up. It's going to keep going. And it was a book called Money and Psychology that I was reading and listening to, actually. And they were just trying to explain that even if you put all your money in a safe bet, not a risky Roger, but a safe bet, guarantees are along that road, it's going to drop. And you could wipe out quite a lot of the pension that you're building up, or quite a lot of the trade that you're building up, the trade stocks. But they said if you carry on with that blip doesn't really matter, because there's not going to be another one for a very long time. So just keep sticking with it. So look at the trends. So I like looking at trends, being an engineer, making sure that you're going to keep safe. You talked about something earlier about basics of trading psychology, and you talked about risk tolerance. So what does that mean to you, and what would that mean to others? Okay,
so great question. Basically, what that means is I've basically defined three broad categories that most people fall into with their natural default tolerance levels. So you've got risky Roger, steady Steve, and you've got cautious Charlie. Okay, obviously that's nothing against the ladies out there. You could replace that with cautious Catherine and steady Susan. It's just had to come up with three names because people learn better when there's something humorous they can relate to. So risky Roger's your Donald Trump. The default setting is bullish, aggressive, and that's mine. Steady Steve is someone who they think a lot more, they risk assess things before they jump in, and they do their homework. They're a little bit more patient. And then obviously cautious Catherine or cautious Charlie, really risk averse, thinks too much, misses opportunities, scared to pull the trigger. So the reason why I bring this is actually in the first lesson, and it's within the first course of my first module of my online course. It's so important that you get this right, because as a crypto trader, the reason why it's so important to get this right is now actually I know that when I look at a coin, or with my trade plan, I actually know now that there's times to merge the top two. There actually is a time where you would also merge them all. So for example, one thing I love about trading is that when you learn and you get into it, there's all of these sayings, things like, buy when there's blood on the streets, that famous quote by one of the Rothschilds. So for example, and then the other thing that Warren Buffett always says, be fearful when others are greedy and greedy when others are fearful. So this is why when you understand that humans have got three broad default tolerance, risk tolerance settings, there's a time when you need to be greedy. So, for example, now, while we're 99% down from an all-time high on certain coins, this is when you've got to be contrarian, do the opposite to what most people think, because the problem is now, the battle I've got as someone that wants to educate people, and I've got a business where I want to bring clients on board and educate them how to make life-changing money in crypto, is they've got to understand that you might have to wait a year before you realize those gains. But the point, so now's when you build your portfolio. The top of the bull market's when you sell it off. So this is why now's the time to be greedy. Now's the time to be risky, Roger. But also you need to be steady, Steve, and do your homework and study the game. So you've got a year, potentially 18 months to study the game and learn it inside out. Perfect. But then you've got that's the time your portfolio is created. And that's what I mean. And obviously then at the top of the market, this is another thing that I learned the hard way. The top of the bull market, my first bull market was December 2017. I'll never forget it. I went to Scotland with my family. We went there for Christmas. We drove around the UK. We went to the Lake District and then to Scotland for Christmas. And my crypto portfolio had gone from $30,000 to just over $1 million. And this is what I'm saying to you. When it's time to cash up, you won't want to. Because you're gonna be, then this is where I now have the gift of hindsight to teach my clients and my students that you need to understand the hardest thing with trading is dealing with greed and euphoria and overconfidence. So again, now this is why there's times even recently where I'm saying to my clients, we got into a coin. Yes, it's a 1000x coin, but I've said take profits, come out of it. Because now I know when, again, I'm seeing other people are talking about it. This is the whole thing of be fearful when others are greedy, etc. So there is a time when you do need to be like cautious Charlie and get out the market, take your profits.
Yeah, good advice. Really good advice. And as you keep mentioning, this is on your course, ladies and gents. This is Alex giving this away for free for you, giving value for you so you can understand it and make your own decisions. And I think it's really good that you've identified the 3 different types of people, but all 3 can prosper in this, can't they?
Yeah, for sure. It's like anything. Look, if you leave your money in the bank, for me, that's the riskiest thing you can do. Hidden inflation is realistically about 10%. So your money's purchasing power is being eroded by at least 10% every year. So £100 is worth 90 in a year's time. And so for me, as long as you know, like I've got, when we set up our trade plan, we basically put our coins into the following 3 broad categories. Blue chips, ones that have proven the test of time over the last 3 bull markets and bull bear market cycles. So for example, Bitcoin and Ethereum are blue chip coins. And then you've got your medium risk to high risk coins. And then you've got your super, like your high risk, high reward. Yeah. So that's why everything is non-emotional. We basically plot things out. And I might say, for example, you put, again, so because I'm risky and I'm aggressive and I want massive, massive life-changing wealth, legacy building money, I might have 40% of my capital allocated to blue chips, maybe 30% now. And then I'll have, say, 40% in medium risk. And then I'll have 20% in my high risk. So anytime I look at a coin, so a new coin comes on my radar, we don't shoot from the hip. We allocate an amount of money into that coin. And that means that percentage that's gone into that coin has to come out of something else, because you can't have 102%, right? You've got 100%. So if you've got 30% in your, so I might say my allocation is 30% blue chips, 50% medium, that's 80, that leaves 20% left over for your high risk. Other people, they could be older than me. They want to preserve their capital. They might go 60% in their blue chips, 30% in the medium risk, and only 10% in the high risk. But again, it's all in relation to how much money you've got to invest, because that's another question a lot of people ask me is, how much money do you need to invest? So again, it's down to you. What's your exit strategy? If my offer is called the 100x Crypto Accelerator, because I'm teaching people how to find coins with 100x potential. So if you had 10K and you 100x that's $1 million. So again, a lot of it comes down to what your own individual goals are, your age, your stage in life. And these are the things I go through when I mentor people, when we talk about your trade plan.
And I suppose you could build the amount that you invest over time anyway. And that's why I like how property and crypto go together. You can make a lot of money in property, and if you just put a percentage across into crypto for every deal that you do, keeping enough to then do the next one, before you know it, you're diversifying your cash. And as you then said, it's further diversified because you're not putting it all into one. You're splitting it into blue chip, medium risk, medium reward, and high risk, high reward, depending on your tolerance levels. But that means you bring your money in, you're making money, and then diversifying it over here. And then when people say the richest are those with the multiple streams of income, this is going to work. This has got to work. I know it's got to work because millions are doing this already. It's just there's a lot of people that don't really understand it.
Yeah, very, 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 very good points, Gaz. And it's the same as I was in property years and years and years ago. Obviously, we'll be touching on this later on in the series. But when I've been waiting for this crash that's never came to get back in. And like we always hear, don't wait to buy property and wait. This is the same with crypto. For every person I've heard, every cynic that's had the opinion of, oh, it's a Ponzi, it's this, it's that. Meanwhile, people are becoming multimillionaires. Like, it's like anything. You either take a position or you don't. And a very, very amazing book I highly recommend anybody reads if they've never read before. Let me just quickly grab it now, actually. This is a book that I only found after I made a massive mistake in trading, and it's called The Zurich Axioms. I've read, you can see there's books all around me. I've read pretty much every book there is on the planet to do with trading. But what I love about this book is that, and I've got the audio book as well as the physical book. I'm always listening to audio books in the car, like you guys. But basically, this book talks about speculation. And this book is based on the rules of risk and reward by generations of Swiss bankers. And it talks about, you have to look at any investment as speculation, and it gives you a completely different perspective. And when you look at it like that, the point of the matter is it doesn't matter what it is. It's all speculation, really. And that's the way to look at it. You know, there's no one on the planet has got rich or wealthy without speculation. You know, whether it be the oil barons like the Rothschilds, all of them at some stage speculated in something. Of course, for every project that went well when they made a fortune, there was others where they lost money as well. So, yeah, that's my thoughts.
But if you edge your bets, you're going to be well. And like what you mentioned earlier, if you're diversifying your portfolio, you are edging your bets because whilst one goes down, the other might go up.
Yeah.
And your risky stuff, yes, you might have big losses, but you're only putting a percentage in there. But you also might have big wins. And then once you've built up that again, then you can then re-diversify. And the amount of money that you put in originally is still there.
Yeah.
And you've made X amount. And as you mentioned, knowledge, get the training, because if you get the training, you're learning to understand how to diversify your cash, how to put money in there, but how to look for the 100x. Now, 100x, do you want to talk about what is 100x? Because there's going to be people out there, what is 100x?
Okay, yeah. So basically, X multiples is very simple. So 1x would be 100%, 2x 200, 10x would be 1,000%, and obviously 100x. Let's get our calculator here. It's 10,000, right? 100 times 100 equals 10,000. So it doesn't sound. I know for some of you out there, believe me, I get it. It doesn't sound realistic, but this is why crypto blew my mind. I'd never experienced anything like it in my life. So I'll give an example. In 2017, there was an ICO I got into. I believe it was called Bitquents, and Bitquents rebranded and then became Ethos, and then Ethos rebranded and became Voyager, which some of you may have heard of. So I got into Bitquents when it was 0.04 cents. Okay. Now, I believe this was one of my biggest wins. I believe I put something like $2,000 into it. So 0.04, okay, times, so $2,000 divided by 0.04. Okay. I had 50,000. There we go. 50,000 Ethos. Now, when that rebranded, I believe I sold out roughly around $12. So 50,000 times 12, $600,000 on that play alone. Now, basically, I did then, unfortunately, go and make a series of mistakes along the way of my journey. A lot of that I kept. Some of it I reinvested into projects that then didn't go anywhere. So this is why, again, as part of the way that I teach people now is the exit strategy is so important because, and again, everybody's different. So if someone tells me they want to grow aggressively, that's fine. You can have a plan for that. But actually, it's what I'm trying to say to you is let's come back to the return on investment. If 600,000 divided by 0.04 is 15,000. Oh, sorry, 1 second. Sorry, my fault. 600,000 divided by $2,000 investment is 300. Okay, so 300 times 100%. That was a 30,000x.
So 100x is really relatively tame then compared to that.
Yeah, so it's 300 times 100%, 30,000x. Like, it doesn't sound believable, but believe me, it happens. The only problem is a lot of the time when you get in, this is why you'll sometimes hear about someone that they bought this meme coin and they become a millionaire, because they've got into it at something like 0.3 zeros or even more, 0.6 zeros and a 1. And then that goes to 1 cent, you're laughing. So, but for every story you hear of that happening, so basically this is why I was never a lover of meme coins, but I am going to say that right now I've actually taken on a mentor in the States that's teaching me how to find these massive 10, 20,000 X plays, because I took the wrong attitude to it before. But then you stick like $200 in. So there are coins that we've stuck like $200 in recently, walked away with like $4,000, come out of them. So they are super high risk, but you don't put a lot of money into them.
No, that's good. That's good advice. And now you've learned what you can do within crypto. This is all open source anyway, so you can actually Google this stuff and say, what are the biggest wins within crypto? You can find it. It's there. It's nothing that's you can't find out. It's all open source. But let's bring it back a little bit, because we're adding value, and you've been very kind to send me a list of stuff that I can chat about, which you're willing to give away. So you mentioned that you've got your trade plan, which you mentioned earlier. You've done your basics. We're allocated a percentage per either blue chip.
Per coin on your.
Yeah.
So, but you have a short list of coins. You allocate into 3 broad categories: blue chip, medium risk. So medium risk and then high risk. Yeah. So you allocate 100% of your money is allocated across those 3 categories, and the client, the student, determines. I can say, well, this is what I do, not financial advice. Some people just completely copy my blueprint, and that's obviously great. Other people tweak the percentages as to their risk reward, desires or their exit strategy. So one client told me he wanted to buy a house, he needed 100K. And I said, well, look, if you've got 10K and you only need to 10x it, and there you go, you've hit your target.
Yeah, great. The other thing that I think people worry about is, where is it kept? Where is all this stuff kept?
Good question. So there's basically within crypto, because it's digital assets, they're always stored on the blockchain. So this is what a lot of people can't get their head around. And how I want you to picture the blockchain, or certainly how I do in my mind, is it's like the Matrix. It's there behind the scenes. So this is what we think is real life, and behind this brick wall is a matrix. So this, I haven't actually got one. I'll show you in the next series. But imagine this was like a hardware wallet. The hardware wallet is one way that you can, this is a form of cold storage where your crypto is actually on the blockchain. So it's always on the matrix, on the blockchain, but the hard wallet is like a portal that allows you to access it and see it, move it, send it. So you've either got your crypto stored on a cold wallet, a hot wallet, which is online, or if it's on an exchange. So for example, Binance, Coinbase are reputable, reliable exchanges. So the saying in crypto is not your private keys, not your coins. So whilst I've never been hacked yet, because number one, I've been lucky, but number two, I know what not to do. Your crypto, if you're trading on an exchange, they hold the private keys, they own it. Obviously, you can send it off, you can deposit it, you can withdraw it, but the point is it's not actually in your possession. You're trusting that person's cold storage and their security. Otherwise, your long-term, so ultimately Bitcoin is digital gold, and I say to people, you don't buy Bitcoin, you accumulate Bitcoin. So ultimately, my game plan, for example, is to have X amount of Bitcoin in cold storage on a hardware drive for my grandchildren, my sons and their children to come. So I use altcoins to accumulate Bitcoin. No one should be buying Bitcoin at these price levels. I don't ever tell any of my students ever to buy Bitcoin. We've missed the boat there. You accumulate Bitcoin by taking profits into Bitcoin.
Yeah, interesting. So you're making over here, but buying in something that's safe, that's then going to just last a lifetime.
Yeah, because Bitcoin's still number one, because at the moment, it's still number one means it's number one in valuation and market cap. So whilst it's circa $28,000, $25,000 at the moment, it will, without a shadow of a doubt, when the next bull market returns, it will blow through its previous all-time high of circa $70,000 and will more than likely touch 100,000, maybe wick up to 110, and then it will sell off again. But the point is that's with Bitcoin, you've got diminishing returns. So Bitcoin's probably a 4x, so 400% is the most you're probably going to earn if you bought it now. So why on earth would you do that? Why would you put your money into something you're only going to make a 4x? If I'm saying, well, look, I believe this coin over here, which I consider blue chip, is a 50x, and it's proven itself for the last 3 bull markets. So that's it really. It's just straight maths. I know how to find the coins that I believe are solid 20 to 50x, some of them 100x plays. So I don't want to put my money into Bitcoin and get, yes, it's pretty much guaranteed, but yeah, for me, again, I'm Risky Roger and I do this for a living now.
Exactly. And once you know it and you've lived through it and you understand it, that's why I've asked you on this podcast, because I want to really keep people safe. So as you know, I like keeping people safe, providing them with the right information so then they can make a qualified decision on where they go next. And this is a massive opportunity for everybody if you're into it. And like what you said, what I see this similar as is people that get their own private pensions, because within your own private pensions, you do the same: low risk, medium to high risk. I don't think they do high risk anymore, but it's all there. And you choose and you split your pension up however you want it to be safe. And it's just the same. And people are doing this all over. So it's nice to get some of those comparisons across and make people understand that this is a massive opportunity, similar to what people are doing already. Just because it's new, it doesn't mean that it should be scary. And then the final thing we want to talk about in this one, because we've got various other series, so please stick with us. Alex has got so much stuff that he wants to tell you. It's unreal. It's phenomenal. This stuff is doing this for free to make sure that you're safe. If you want to find out more, go to Alex anyway, and he'll have those conversations with you to make sure that you are safe within it, but you understand it. He's got a course, but we're not here to sell the course. We're just here to let you know. Please don't see this as an upsell. We're trying to just say to you, come across and have a look at what the opportunity is. So the last thing is, you said that things change fast in crypto. What do you mean by that? And how can people understand that a bit more so then they can be quite clever and safe within crypto?
Okay, so an example of that is, it doesn't matter how good a project is. So these are the following examples in no particular order. Number one, some of the strongest projects could be gone tomorrow, not because they're scams, but because of a legislation change or some other reason. So, for example, I wasn't involved in FTX, which is this Sam Bankman-Fried. A lot of people have heard about this FTX scandal. What you had was a group of people not long out of uni that were obviously, intelligent in some way, shape or form, but basically had the trust of people to create this platform that was called FTX. I actually never had an account with it, never used it because I was happy with the exchanges I was using. But FTX raised billions of dollars, and they were investing into every other crypto project below them. And this is where, for example, the project I told you about called Bitcoins that we branded to Ethos and then finally Voyager, they were going to buy them out and all these other projects. But what I'm saying is that they were in effect just absolute complete, I don't know, idiots, clowns, cowboys that portrayed a picture of knowing that they could do the right thing, but basically didn't know what they were doing. And then, you know, the music stopped and it all came out. But whilst they made a massive thing about this in the crypto, because remember, bad news sells, right? Negativity sells, good news doesn't sell. So they like to try and blame the recent crypto sell-off and blame everything on FTX and talk about how it could bring the banks down. It's just a load of rubbish. The FTX scandal was something like, I don't know, 5 billion. But the Lehman Brothers, okay, in 2009 was 63 billion. So you have to keep things in perspective and just remember that's a great narrative for me because it drives the prices down and we just buy the dip. So for me, you just got to know how to use it. So that's one example of things moving quick, and you need to understand the narratives and you have to understand to think the opposite to the herd. Also, things like there's a really, really good company out there called Ledger. Ledger Nano is one of the most respected hardware wallets. This isn't one I'm showing it, but it's not one. I've got one in my office I'll bring down next time. But basically, Ledger Nano had a problem recently where they're a Paris-based crypto hardware wallet provider. And on May the 16th, they revealed plans to introduce Ledger Recover, which was an optional paid-for subscription service for Ledger Nano X wallet holders that provided a seed phrase recovery system involving third-party custodians. The long and the short of it is that they're saying, so in crypto, if you got the private keys, you own that wallet and that crypto. So the community really basically reacted to this very badly. And because what they're saying is that that's going against the whole service that you're providing, which is guaranteeing a user's private keys will never leave the device. So they basically put the brakes on that because the community reacted so badly. So little things like that. The space is, because it's evolving so quick, you've got different narratives like artificial intelligence, gaming, the metaverse. The great thing is it's exciting, but it does move so fast that you could literally spend your life working on this. This could be a full-time job to keep up with it. But you don't need to. And all you need to do is just understand that it's a fast-moving space. And also, some of the companies that are here now won't be there tomorrow. But again, there's a process behind how we analyze companies, because that's the thing, right? A coin is a company. So people buy shares in their SIP or, through a bank. You might invest in an ETF. A cryptocurrency is a company, and some of them are better than others. Just like 9 out of 10 companies fail, in their first 3 years, 9 out of 10 crypto companies are not going to be here in their first 3 years. So we've got a methodology as to how I teach people to assess these cryptos or companies, and that's how we decide where we put them: blue chip, medium risk, or high risk.
That's really good. Yeah, I like that. I like the fact that you're still looking at the news. A lot of people say don't look at the news because you're just going to get one of the masses, but it's not. It's about understanding what's happening in the news, but understanding what's going to happen to the herd, and then doing the opposite if there's an opportunity. So I do like that.
Yeah, quite often. So I'm in a group. There's a group of traders I network with all around the world, from Russia, Dubai to Mexico. And well, the guy in Russia now is living in Cyprus because of the Russian situation. I just throw that out there. But basically, sometimes I'll get trade alerts come out and I'll do the opposite because I'm like, well, now hold on a minute. Buy the rumor, sell the news. So again, it's just I'm not saying I know it all because I don't. I make mistakes. But again, with that experience now of 7 years, for me, sometimes it seems very obvious when the news comes out. Like, no offense, but dumb money, you're buying from the smart money that's offloading. So after a while, and again, also because when we get into technical analysis, the charts will tell you the news. So it's like, there's another saying, look at the charts and I'll tell you the news, because the chart will tell you when it's time to get out, not when it's time to buy. And this is why when people don't know about technical analysis. It's like you're basically investing with your eyes closed. You're guessing, and that's the way that I look at it.
And it's going to be a big mistake. Well, thanks for that, Alex. Really appreciate it. This is the first in the series. Hopefully, you've got some, a big insight, a bit more understanding, and hopefully it sparks something within you to try and find out more, but going the right way within crypto, because it's a massive opportunity. What we've got is next time we're going to be talking about, so we talked about protection in this one. We're going to be looking at demystifying crypto, but also some of the big players. If you want to find out about the big players, Alex is going to talk about them in the next episode. But thanks, Alex, for this first one. Really appreciate it.
No, you're welcome. Thank you for having me on. I really appreciate your time, Gaz, and I hope that your listeners have learned something and it's opened their minds up to the opportunities there are in crypto. And believe me, I'm just a normal British lad, ex-military, entrepreneur. If I didn't think that I could make my multiple millions in crypto, I would not be interested. And actually, some of the people I've got the greatest respect for are all in on it, and they're far more intelligent than me. They've amassed like far more money than I probably ever will, and success leaves clues. I'm standing on the shoulders of giants in many ways.
Yeah, so thanks, Alex. That's brilliant. If people want to contact you, how can they contact you?
Okay, well, you can look at my Instagram at The Focused Mentor. So that's Focused ED. And obviously, I've got my own Facebook page with the same name, The Focused Mentor. I'll be providing you a link that they can click on as well, Gaz. So please feel free to do that. The link will take them to a page where there's a load of free information as well. But otherwise, yeah, just get educated. Spend some time, learn about it, and it's not as daunting as most people think. Like anything, once you get involved, it's quite easy. It begins to become familiar.
Yeah, so look out for that link, everybody. What I'll do is, if you need to find out anyway, contact me. This will be on my socials. I'll tag Alex in anyway, so you should be able to tag straight to his socials. I'll put it in the comments, but if I can, hopefully we can get a QR code. Is it going to come as a QR code or something like that? If it does, we'll attach it to the end. So just pause, click, and then keep going. Or if you're listening to this on a podcast, just look in the comments or contact us on Facebook, as Alex has said, or his various socials.
Yeah, great, Gaz. Thanks for your time. Really appreciate it.
No problem. Thank you.
Right, yeah, so Gaz, thanks very much for having me on your podcast. If any of your listeners would like to know more about doing one of my courses and learning about my mentorship packages, if they obviously use the QR code, okay, scan the QR code, that will take them to my video sales letter, where when they finish watching that, they can jump on a strategy call with me. Just make sure that you use the code GAZ100X and tell me that when we talk, so that I know that you basically came through Gaz's podcast. And I will give anybody that announces that code that signs up with me 10% off my mentorship course, and I'll give an additional free 1 hour one-to-one Zoom session. Okay, so use the code GAZ100X. Okay, thanks for your time. All the best.